If you can tell which costs stay put and which move when activity changes, you are halfway to good pricing, budgeting, and exam answers. In management accounting, this pattern is called cost behavior, and it shows how costs react when output or sales go up or down. Let's start with the word cost itself. A cost is the resources your organization gives up to reach a goal, like money spent on materials to make a product or on rent to have a factory. In management accounting, we care about how that cost behaves when activity changes. For example, when you produce more units or make more sales. Some costs stay flat, some rise and fall, and some do a bit of both. First, fixed costs. A fixed cost is tied to a period of time, like a month or a year, and it stays the same total amount as long as you operate within a certain activity range. Think of fixed costs like a flat streaming subscription fee. Whether you watch one movie or 20, the monthly fee does not change within that month. In business, premises rent is a good example of this kind of cost. If your business agrees to pay a fixed amount of rent for a year, that rent does not rise just because you produce or sell more units, as long as you stay in that same space. So rent is treated as a fixed cost over the agreed period. Next, variable costs. A variable cost changes as activity changes, but it does this in a steady way. The cost per unit is roughly the same, while the total cost increases or decreases with the number of units. Imagine buying apples at a fixed price per apple. 1 apple costs a certain amount and 10 apples cost 10 times that amount. Direct materials in a factory work like this, which is why direct material cost is treated as variable. When you produce more units, you use more material. The cost of material per unit stays about the same, but the total material cost rises as you make more units and falls if you make fewer. That pattern is exactly what defines a variable cost. Sales commissions can also be variable. If the commission is set as a fixed percentage of sales revenue, then more sales mean more commission and fewer sales mean less commission. Here, the commission rate per dollar of sales is constant in the same way that the materials cost per unit is constant. It is the total commission that moves in line with the level of sales. So we class this commission as a variable cost. Some costs do not fit neatly into fixed or variable. Semi-variable costs, also called mixed costs, have 2 parts. One part behaves like a fixed cost, and the other part behaves like a variable cost. Think of your phone bill. You often pay a fixed line rental just to have the service and then pay extra for each call or for data used. The rental portion stays the same each period, while the call charges rise and fall with usage. So telephone costs are a classic semi-variable cost. Finally, step fixed costs. These costs stay constant over a band of activity, but when you pass a certain critical point, the total jumps to a new higher fixed level and then stays flat again for that new range. The salary of a factory supervisor is a good example. One supervisor can manage production up to a given output level. Within that level, their salary is fixed. Once output goes beyond that limit, you need another supervisor and the total supervisor cost jumps. In our worked example, one supervisor can oversee production of up to 20,000 units. Any output from 0 to 20,000 units has the same total supervisor salary. So in that range, it is a fixed cost that does not change with more units. Once the factory needs to produce more than 20,000 units, a second supervisor must be hired. Total supervisor salary then jumps to a higher fixed amount and stays constant again for that new higher activity band. That flat section, then jump, then flat again is what we mean by a step fixed cost. So remember, fixed costs stay the same within a range. Variable costs move with activity. Semi-variable costs have a fixed and a variable part, and step fixed costs stay flat, then jump when a threshold is crossed. Keep classifying costs this way in questions, and your management accounting decisions will start to feel much clearer. If this breakdown helps, subscribe for more short, focused lessons that follow the CPA Australia Management Accounting Guide step by step.